both interest income and profit are seen very strong for the companies that Abhishek brought out. But let's ask the expert. Digant Arya, the co-founder at GreenEdge Wealth, joins us. And in my estimate and experience, Digant is absolutely the best watcher of the NBFC space. Digant, thanks. First up, Bajaj Finance is going to come with its numbers. And their initial numbers are mind-boggling. Over 30% rise in AUM and disbursals. So you think they're going to start off with a bang? Are you positive on Bajaj Finance?
Lata, morning. Thank you for having me again on the show. See, Bajaj Finance, I think we have crossed an inflection point this quarter that after, say, growing for close to 35-40% in the last decade, we saw that the growth rates after the COVID hit them had especially plateaued in that 25-28% region. Like this is the first time they have actually crossed the 30% number again. So it seems that this is a crossover quarter for Bajaj Finance where their online or so to say, the digital strategy has also started picking up. They're always great at the physical, in the physical world, but I think the digital world transition has happened very well over last 2 years. So I think Bajaj Finance, yes, we can actually expect good results and something good to happen to the stock price also over a period of time, because they have crossed over that 25-28% kind of a growth rate where they will start.
Okay, that's very important, to grow from the 20s to in the 30s, and such a large balance sheet at that. Digant, more generally for everyone, is there a pressure on margins? Since cost of money, RBI announced one ICRR, is there a likelihood of margin compression?
I think, NBFCs typically, those who are good in their own monoline segments, something like a CV finance or a microfinance, I think they can easily pass on whatever pressures are there on the borrowing cost side, because the underlying markets are doing well. Like the commercial vehicle market is really doing very well. If you look at the microfinance, we saw that the RBI regulations helped them, not restricting that 10% band. So now they have increased their lending rate so much. So I don't specifically see NIM pressures, maybe somewhat in gold finance, because, the bank competition from banks is still reasonably high. That's more of, a competitive reason. Otherwise, I think NBFCs should see stable growth, stable margins, stable asset quality. What I just think can be a little out of whack for a lot of them is the OPEX, because in times of high growth and in times of digitization, the OPEX can go a little out of control. OPEX going a little out of control is really no big disaster for any companies, because, we know that eventually it gets followed up with operating leverage.
Okay. Even the small finance banks, Ujjivan reported 42%, 43% actually growth in deposits, and disbursals up about 18%. I think Utkarsh SFB also reported fairly good 20% growth in deposits. So small finance banks is something to watch out for? AU also, I think very strong.
All these small finance banks, Lata, that you mentioned, they are, they are microfinance companies in short. They just have a banking operation on the liability side and regulatory side, but on the asset side, they are still very much a microfinance company. And microfinance sector is in a sweet spot. It's doing well. But I think the street has already extrapolated these numbers, which are cyclically high numbers and already given high multiples. So I think Ujjivan and Utkarsh, they trade at, 2.5 times of, current book. I think these are not the multiples you want to give to the, deeply cyclical companies. But yes, we are in an upcycle, so there is a party out there. But I would be cautious. There are much better banks available at a better valuation, and maybe even the Shrirams and L&T Finance of the world are available at 1.5 times book. I would more like to be cautious in these, the Utkarsh and the Ujjivans of the world from the valuation standpoint.
Okay. In terms of verticals, therefore, which would be your best vertical? You would prefer, would you think the quarter will be best for microfinance and then commercial vehicle? What will be your order?
So I think my pecking order, Lata, is still the same, that CV finance should probably be the best performing space, because there is good growth and there is no asset quality issue, because the the average prices of second-hand vehicles is up by 30-35% in last 2 years. So there is no actual fear of asset quality going bad for not just this quarter, but for many more quarters. So I think CV Finance is a space I'll watch out for. Chola and Sundaram have reasonably rich valuations, but then when you look at someone like a Shriram or an MMFS or someone like an L&T Finance who is at the intersection of microfinance and CV Finance, I think these will be my, the biggest focus area in the NBFC space. Obviously, this will be followed up by microfinance, where some of the late entrants to the party, someone like a Spandana or a Bandhan, can actually turn around in the next coming quarters. So CV Finance number one, microfinance number two, and obviously the intersection of this, which is L&T Finance, I think they offer interesting propositions for investors.
Okay. Any red flags that, or any companies where you would be wary?
See, I think the place where I would be very in the NBFC sector, see, right now, say if you talk about 2 quarters, I don't think there is any reason to worry in terms of disappointment in numbers. But, if we just talk a little longer, say 1 year, 2 years, I think the housing finance companies will face significant pressure in terms of NIMs because, the competition there always keeps heating up. Once HDFC Bank integrates HDFC Limited, they're going to go all out in the housing finance business. And that can create problem for someone like a PNB Housing or a CanFin Homes later on. Then if you talk about microfinance, we've seen 5 good quarters in a row, maybe 2 or 3 more good quarters. But, after that, you will see credit costs start eating up into the profit margin. So that is where I think, we are at the late cycle now in terms of stocks. Something like a Poonawalla FinCorp where valuations are too high in anticipation of it trying to replicate the success of a Bajaj Finance or some multi-product NBFC. I think these will be the pockets where we should be wary of. Otherwise, I think the CV financiers and the multi-product companies like Bajaj Finance, they do offer a decent risk reward.
Okay. And finally, I wanted to speak about this often expressed fear by Reserve Bank about unsecured loans. They keep a hawk eye on banks, but do you think we should see any signs of trouble in unsecured lending in any of the NBFCs?
So Lata, I think, if we rewind back to 2010, we were all scared about the personal loans that, an HDFC or an ICICI was doing. In 2015-16, we were scared about the personal loans that Bajaj Finance was trying to do. I think right now we are scared about the personal loans that these digital only companies are trying to do, where you don't meet your customers and you still lend them loans just based on some digital kind of data. I think that is where RBI is actually very cautious. And second is that, there are a lot of top-up loans which are being given where the customer does not even know that it's a personal loan. I think at an industry level or, at the large listed NBFCs, this is not a very big threat. I think whatever that threat is, some part of it sits in the startup or the unlisted space. So I would not worry too much. And even in that startup unlisted space, something like a Paytm, I think that we will evolve, we'll see some cycle, but 5 years later, it's going to be a very large and a profitable segment. So I wouldn't worry much about the segment per se, but yes, the processes and the quickness with which everyone is growing, I think there will be 1-2 years of, corrective actions which will be needed in some places.
Okay, we're almost running out of time, but I do want a last question on exactly the last bit that you touched. The PB Infotech, the Policy Bazaar guys, Paytm, YouGrow. There are a whole bunch of new digital lenders. Is that a place where you will bet on? They didn't figure in your hierarchy. That's why I'm asking.
So I think in that list, Lata, I think Paytm is the only one where I have some degree of comfort as of now because see, they have a lot of data based on which they can do the lending. And see, that data is really, really humongous. 3 crore merchants doing 12 transactions every month. So if you just multiply and do the math, the data is humongous. You are lending based on that data. Obviously, you will make some mistakes at the start, but there is a good scope of refining. So there's Paytm in the listed space and there's Navi, which is an unlisted company right now, the Navi FinServe. Yeah. I think these two are doing a decent job. For the others, the YouGrow Capitals of the world, the Poonawallas of the world, which are very new, plus they do not have any legacy data to work with, that is a place where I'll be cautious.
Okay. Thank you very much in such a short time to give us a very good idea of what we should bet on and what we should look forward to in the second quarter numbers. Thank you very much, Digantaria, for joining us. I think for me, the key takeaway is the big boy that will announce numbers on Tuesday. Bajaj Finance, the crossover from being in the high 20s, as Digant said, to the 30s in terms of growth, 32% growth in AUM. So that's the one we will watch out for and see whether they flag off the NBFC earnings season with flourish.